Hey guys, welcome back to Smart Trader. This is Dias Paul and thank you so much for all your likes, comment, share and subscribe my channel. If you are a new viewer, then go to our channel, watch all the videos, and if you're liking such videos, then go hit the subscribe button to be part of this big family. And for the ones who want additional services, you can always WhatsApp our team 7892652481. They will work from 11 in the morning till 8:30 p.m. IST, and Sunday is a holiday. And also you can visit our website www.smarttrader.co. For the ones who want to open an account in Zerodha or Upstock, you can watch the description below. You get an offer till December 2018, lifetime learning with Smart Trader. That's me. So without wasting time, let's start off. So why equity tops all other asset is the question, right? So I have few points which definitely supports this particular topic, and if you have any suggestions or if you have anything to add on to this particular topic, then you can go to the comment and add on to this topic. So this will help a lot of subscribers around there. So first of all, when we talk about investment, why do we do investment? So that our money grows on a timely basis. As the time goes, our money also should grow. And also, in order to avoid the tax and save some taxes, this is what the main reason we see in investments, right? For those reasons, we do a lot of ways of investments. And for example, we do savings, or we do in fixed deposit, mutual funds, so many other things. But why equity tops everything in the longer term? That is what we are going to discuss. So the first point which is going to support our topic is going to be inflation. Yes, inflation is something which you have to keep in mind. You may argue that yes, savings or fixed deposit is more stable and safe, but understand this inflation. If you consider inflation, this inflation can blow up all your fixed deposit or savings. Whatever the money you have saved is nothing. After few years, the value of that is lower. So inflation can kill your fixed deposit or savings. But if you consider equity, it has a capacity to ride over the inflation. Yes, equity is volatile. If you consider on intraday or a short term period, equity is it's volatile. So it can go up, you see it coming down, so you feel it is not safe, all that. But if you see on a longer period, the historical data, Nifty or whichever, Sensex, Nifty, if you see the Sensex, the equity market has given you, and it has beaten up the inflation well above. And if you consider Sensex today, it is almost 33 plus times compared to 1990, where the market was and where the market is today. So if you see how far we are, how far this equity market is. So that's one reason why inflation, if you consider inflation, equity is the best considering the market and its performance. So the second point is going to be the dividend, right? Most of you guys who do not know, dividend is something which has been paid by the company from their profit. So they decide, I'm going to give certain portion of my profit to all my shareholders who are holding our shares. So they give this particular dividend as like a bonus to all the shareholders. So if you have invested on equity or holding, for example, Infosys stock, and the company declares that they will be giving a dividend, for example, for one share they'll give 1 rupee or 10 rupee, any example depending upon their declaration. You will, if you're holding 100 stocks, you get 10 rupees, you get 1000 rupees in your hand. So that is going to be extra additional income. It's going to be a secondary income for you. So holding equity will be more advantageous. So in those certain reasons, if you consider dividend, this is an additional income along with your equity performance of the company performance. Along with that, this dividend is an additional bonus to you. Point number 3 is liquidity. Of course, for example, if you consider a real estate asset in real estate, and if you have a land and you want to sell the land, to buy this, it's not that you can go today morning and buy the land and you cannot sell it in the same day or next day. It takes a lot of time. You need to find a buyer, you need to find a seller, a lot of things is there in the process, but the liquidity is very lower. But if you consider the stocks, if you want to sell the stock, you can buy the stock right now and during the market hours, and you can sell it right away in the market hours, and next day you can buy it or next day you can sell it. So the liquidity, if you compare to other assets and real estate and all that, then equity is more faster and liquid. So liquidity plays a very important role in this particular factor. So the next point is going to be low capital investment. So if you want to buy a land, or if you want some gold, you need certain particular amount of money, right? So if you're buying a land, you need so much of lakhs of money, and or you have to take a loan and buy and pay an EMI. and for lands you may not get a loan. To buy a house you need a loan. So these properties or assets needs a lot investment, but to buy equity, even a 500 rupees is more than enough. If you see, thanks to this mutual fund, equity mutual funds, where you can invest these 500 rupees on a monthly basis, also these SIPs where you can save 500 rupees and whatever amount you like, you can on a monthly basis you can save 500, you can buy stocks of 500 or 5000 on a monthly basis SIP from your salary. So a low investment can be done in terms of equity. On a monthly basis you can save and invest in that money. It's not that you're saving the money, this 500 or 5000 rupees what you're putting is not just saving, but it is also increasing based on the market performance. I'm not saying short term is when you are doing a trading, but if you're doing investment you have to look at the long term. When I say long term, today you're buying, after 5, 10 years, 15 years, what will be your capital, your 1 lakh rupees, what will your 1 lakh rupees be if it is in your saving account, and what will your 1 lakh be if it is in your equity. So this is what I'm trying to tell you guys. And also the next point is power of compounding. So in case of equity mutual fund, there are mutual funds where they will use your dividend, whatever dividend you earn, they reinvest it in the mutual fund, they buy more mutual funds. So you can see a power of compounding. The money which you got from the market has been reinvested in the market, and you're still getting, you know, when the market is performing, you're getting profit over those reinvested also. So the power of compounding is higher in terms of equity. So these are the few points which will support that why equity is better compared to other assets like real estate or fixed deposit or savings. It is better compared to other investment. That's the reason people prefer into mutual funds compared to fixed deposit, and also look into invest into equity, buying a few positional stocks for long term. So these are the things what people are doing. So these are the main reasons. There are a lot of people who are working professional who do not understand this difference, and they think that only saving account and fixed deposit is type of investment. No, this equity is an eye opener for most of the people who do not know. Yes, there is a small term of risk, but considering mutual fund and all other how it has performed periodically, if you consider long term, these are more beneficial comparing the inflation. So this is one advantage for people who do not know about this. So try to share this video with all your friends and colleagues who do not understand how to invest money and which is more better in terms of returns. So hope this video helped you guys. If you like such video, then hit that like button. Also comment on this video, share this video with all your friends. Don't forget to hit the subscribe and that bell button. See you soon in my next video. Till then, take care. Bye bye.